Moving on, and we have on Tuesday scheduled to be released in the Eurozone is the Italian trade balance, with a most likely low impact expected, because Italian trade balance is only one component, so Italy is only one component of the whole Eurozone. It is not a release for the whole zone. But 30 minutes later, in the UK, we should have the CPI, and this is most likely to influence the volatility expected on the Great Britain pound pairs. So look for the crosses Euro, Great Britain pound, look for Great Britain pound, Australian dollar, Great Britain pound, New Zealand dollar, Great Britain pound, US dollar. All the Great Britain pound pairs should be influenced, should react to this release. Then we will have the German zoo economic sentiment. This is one of the most important economic releases that affect the euro-related pairs. Why? Because this German zoo, it is a survey. It measures a level of diffusion index based on surveyed German institutional investors and analysts. Now it is released monthly on the second or third Tuesday of the current month. So see, this is these events are all scheduled at a specific time to be released, a time that is known in advance. And by tracking the values of these releases, you might have the you might form an idea about what is happening with a specific economy, how trends are going, and so on and so forth. If you are looking, for example, at this one, which should be interpreted above zero indicates optimism, below indicates pessimism. So if you are looking at such releases for the past, this is 1, 2, 3, 4, 5 months already in the past, then above zero is optimism, so 48.2 optimism, then 48.5, 36.3, so optimism decreasing, 36.4, and 38.5 on the last release. Now we are looking for 39.9 if you look here. So it depends. We will see if the forecast will be matched. This is a leading indicator of economic health. Investors and analysts are highly informed by virtue of their job, and changes in their sentiment can be an early signal of future economic activity. Then we will have also on Tuesday the Bank of England inflation letter. Then in Canada we will have later in the day manufacturing sales. Then the core CPI Consumer Price Index in the United States, and that would most likely end the volatility on the day after the releases. Also, members of central banks are scheduled to speak between the meetings. For example, in the United States, the Federal Reserve is meeting every 6 weeks for releases the statement regarding the monetary policy. Now, between the meetings into those 6 weeks, many members come to markets and have speeches pointing more or less important data, or trying to transmit messages that they consider the market should take into consideration. Maybe sometimes some statements after the meeting are misunderstood by markets, and because of these members, like here, we are going to have the FOMC member George speaks, and here are the details for his speaking, due to speak about economic conditions at the Kansas City Federal Reserve's 2013 Agricultural Symposium. So he will speak, and if the Fed has something to add from the previous statement that they made during the FOMC meeting, they will do this through the FOMC members that they are due to speak. Then on Wednesday in the United Kingdom at 5:30 a.m. we're going to have the claimant count change. This is the unemployment rate, and asset purchasing facility vote on Wednesday, and official bank rate votes. Then we'll have the Bank of Canada rate statement, and Wednesday Mr. Bernanke testified. Now this is a highly important event. Mr. Bernanke, when an important central banker like Bernanke in the United States and Mr. Draghi in Europe speaks, so Draghi speaks after the interest rate decisions in Europe, each first Thursday after the let's say the interest rate decision, Mr. Draghi is going to have a press conference where questions are being asked, and his let's say remarks move not only the euro-related pairs but the market as a whole, as the attention in Europe regarding the problems and the financial crisis are extremely important and most likely to influence all the markets. Now, not the same in the United States. Mainly more important, because what Mr. Bernanke, the Fed chairman, says influence the United States economy, and this being the biggest economy in the world, everything that is related to it should be viewed and considered. So when Mr. Bernanke testified, look for important shifts and volatility to come to the markets. Highly recommended 60-second options to be traded, not higher expiration dates, because you risk that at the expiration date your option to be out of the money. Mr. Bernanke is due to testify to the semi-annual monetary policy report before the House Financial Services Committee in Washington. Now, more hawkish than expected, good for currency. Dovish, bad for currency. So, and you have the details here. The testimony comes in two parts. First, he reads a prepared statement, then the committee will hold a question and answer session, and so on and so forth. So since the questions are not known beforehand, they can make for some unscripted moments that lead to heavy market volatility. I would say that this is the main event of the week. Important releases, economic releases all week, but I would say that this is the main event of the week, and most likely, if you have expectations for the whole week to come, expect main ranges to be held until Wednesday, when Mr. Bernanke speaks, and after the testifying, then look for ranges for trends to end and other ones to begin. He will also testify on Thursday, but basically, based on my experience, the statements are going to be the same, due to testify on the semi-annual monetary policy report before the Senate Banking Committee in Washington. Nevertheless, the market would look at each word out of Mr. Bernanke's mouth for clues regarding the tapering in September, the removing of the stimulus, or something like this. And you have the exact time when this begins, 10 a.m., period. Not early, not late. And then on Friday, everything is going to be done with the most important data to be released out of Canada, with the CPI in Canada to be released, and all the Canadian pairs should be watched closely. During the weekend, we will have the G20 meetings, and you should be aware during the weekend is a G20 meeting, because sometimes important events are happening and markets open with gaps on the next session on Monday. But this should not affect if you are trading binary options, because if you are being involved in a binary option that also stays over the weekend, you are locked into that position, and not really matter for the ones that trade on the short to very short term, because those options most likely are already expired. Now, this was the presentation of 1 week of the economic calendar, what to be expected. I wanted to do the week that is coming, and so in this case, you should also have one glimpse of what's about to happening. But you can go. So this is for the week July 14, July 20. You can go even forward. See, this is for the week July 21, July 27, and all the economic releases are being scheduled here. So make sure that the economic calendar is part of your fundamental analysis. Without it, you are going to be on, let's say, not on the right track, because without it, you will be blind in seeing why market moves when economic releases are coming to the markets. Now let's move on to the next recording.